It's a tough market out there, but if you have the right products and you think customer experience first, there seems to be an opportunity to keep on growing and defying what is going on in the macro environment. Pure Storage CEO Charlie Giancarlo joins Making Markets to talk about how the company continues to grow, take market, and win through a customer experience-led strategy. Tune in. This is Making Markets.
This is the Making Markets podcast, brought to you by Futurum Research. We bring you top executives from the world's most exciting technology companies, bridging the gap between strategy, markets, innovation, and the companies featured on the show. The Making Markets podcast is for information and entertainment purposes only. Please do not take anything reflected in this show as investment advice. Now, your host, Principal Analyst and founding partner of Futurum Research, Daniel Newman.
Charlie Giancarlo, CEO, Pure Storage. Welcome to Making Markets.
Thank you, Daniel. Pleasure to be here.
Yeah, it's great to have you as part of the esteemed guests that I've had on this show. It's always interesting. And Pure Storage is a success story and a company that I've been following for a long time. And I've long wanted to have you on the show. So I know the audience is going to be really excited to have you here. You guys did just report some earnings, and we're going to talk about that in a little bit. But I always like to start off when I have a chance to get you and your peers on the show, talking a little bit about the broader market and what's going on. You know, we're here. It's the middle of September. I know people sometimes listen to these things on demand. It's 2022, and we're in a pretty tough market. If you look at historical data, this has been one of the worst markets in decades. You've got a lot of pressure between interest rates, between inflation. We've got still some sustained wars and threat of wars on different fronts. How are you feeling about the macro environment? Let's start with an easy one.
Well, there's going to be this changes coming for sure. Go figure. Money starts costing something, and the markets change, right? We've been living on 0% interest rates now for some time, and money is about to start costing something. And when it does, investors have other places to invest their money on a relatively, lower risk basis. So I think what we're really seeing is a big adjustment. Go figure, the governments inflate their currency by 20%. What do we see? We see some inflation, which we can expect for a while. And in addition to that, then the Fed, has to raise interest rates, and then money gets parked on the sidelines, waiting for those rates to peak. So we're seeing a lot of money come out of the market. But if you look at the real economy, you also see some changes taking place. First of all, consumers are tired of being cooped up at home. They want to get out. They want to enjoy themselves. They want to be with other people. So they're looking to travel. They're looking to go out to dinner. They're looking to get out for entertainment. And so you're seeing a big shift of where dollars are spent. They're not spending it on another TV. They're not spending it on, streaming, binge watching videos. They want to spend it outdoors. And so I think we're seeing also just some change in where money is being spent. But consumers have also never had this much savings, in many years. And so I think that the fundamental economy is still relatively strong. Yes, we're seeing a lot of disruption. We're seeing disruption in where money is invested, seeing disruption in where money is spent. For our industry, for the IT industry, though, digital transformation is still top of mind, because these companies have seen that companies that were more digital, that were more virtual, fared better in a disruptive environment. And so that investment is going to continue, even if it slows down a bit. So in terms of my personal point of view, I'm expecting, the economy to soften a little bit, but not to go into massive recession. And I'm expecting, the great thing about recessions, if there's one good thing about it, Alan Greenspan said it best, is the one thing you can count on in a recession is it always ends. So I think we're going to see the same here.
Yeah, and I that's some encouraging words for everybody out there, because it does feel sometimes like you're in the abyss when things are going downward, whether that's the value of your home, whether that's the value of other assets, your equities, your 401k. Sometimes it does feel like the falling knife. And of course, the same euphoria that people think it'll never stop going up. I laugh all the time, as someone who goes on CNBC, and I listen to some of my, my cohort and colleagues, and I still remember October last year, everyone saying buy tech, buy tech, buy tech. And then this year in March, April, May, when oil had gone to just unbelievably high prices and people are out there recommending oil, and you're like, there's got to be a contrarian play. Your peer, Bill McDermott from ServiceNow, came on the show, and we talked about this concept of teching your way out. Yeah. And effectively, all companies are going to have to figure out that balance of how digital transformation and technology, automation and AI are going to enable them to run more efficiently, to optimize supply chains, to deliver customer experiences with less cost and greater satisfaction. It's going to be digital and it's going to be technology. So while my sentiment I share with you, Charlie, I think some consumer technology might suffer, especially in the middle and lower tiers, the commodity-ish. I know they're not truly commodity, but the lower end. I still think iPhones will sell. I still think the higher end stuff will keep selling. It's just like the high end cars are not being hit the way the middle cars are, because, like you said, all that savings, all that wealth that people created is still there. But technology, cloud, AI, storage, these are core components of a company's digital transformation. And I just don't see it going away. Maybe it'll slow a little bit.
Right.
But if you're long and, if you're a market person and you're an investor, there's a lot of great companies on sale.
There's a lot of great companies on sale, and you can never time the peak and you can never time the bottom. So although I think this peak's been coming for a long time, and some people might have felt like they got out early, but if you get out a little early, that's fine. I do think people will be coming back into the market when interest rates do peak and it starts coming back down. And conversation we recently had, it's the quality companies that will really start to distinguish themselves during the downturn.
Oh, absolutely. And I do like that you said that. I mean, we're gonna smash demand. We're gonna keep raising rates. No one's gonna want to buy houses. No one's gonna want to buy cars. The economy's gonna kind of come to it's gonna have to come to a bit of a halt, and then they're gonna have to turn the other knob. It's just they're gonna go, okay, time to bring them down. So patience wins, Charlie. Patience
always wins. Well, and balance, patience and balance, right?
I like that. So let's talk about Pure a little bit. I appreciate that perspective on the overall market. You had earnings, about 2 weeks ago?
Correct.
Just outstanding. I talked about it with Pat Moorhead on the 6-5. We were gushing. And, I don't like to be that way as an analyst. I got to be neutral. But all the numbers were going in the right direction. And I want to get a little, first, just give me the quick recap. I know it's probably a distant memory. You're starting to plan for the next quarter.
We're already in the new quarter, right? What have you done for me lately? But a quick recap is we grew 30% year over year, for what is our Q2, which ended at the end of July. So very strong growth. And we saw our subscription to ARR up over 30%, at 955 million. Gross margins held strong. Good, strong, operating income, good, strong, free cash flow. So really the results speak for themselves. We continue growing in what had been what others have described as a tough market. We believe it's still a very strong market. And we raised our guidance for the year to $2.75 billion. So, we're definitely seeing some good demand, through the rest of the year.
Beat and raise. That's not I haven't heard much of that in the last couple of quarters. In fact, I called this quarter kind of the great guidance reset for most companies. This was the quarter that most CFOs and boards just kind of bit the bullet, Charlie. They're just like, this is the quarter. I guess we're just going to tell people, because as you know, the part of the magic formula to being a public company is just beat and raise. If you just beat and raise every quarter, you're going to be a fan favorite. And so sometimes when you hit the end of a growth cycle, you've got to do like hey, we're going to actually guide way down right now. And then we're going to get back.
You have nothing left in the tank, right? But you got to be careful running a public company as well. Is you never really want to get ahead of your skis, right?
Yeah.
And so, we took all that into account, and we feel, fairly comfortable with where we ended up.
Yeah, I can't imagine in this current market you would have been beyond ambitious to what you felt you could do. And of course, nobody gives guidance they don't feel is I hope nobody's giving guidance they don't think is possible, but I do think in this particular quarter, there was a lot of reflection being done by you, your leadership, your board, you talking to your sales leaders, being like, what are you seeing? What are you feeling out
Yeah,
there?
that's right.
And clearly you came back and said, hey, there's momentum. There is
There's good
momentum
momentum.
here. So
Also, we're a share taker in a very large market, right? And that makes a very big difference. The market doesn't have to grow for us to grow. We can continue taking share, even if it were a down market, which I don't believe. But even if it were a down market, I believe we can continue taking share and growing well.
So, yeah. So, with that in mind, hitting on momentum, part of the momentum is look, it's a large market. You've certainly shown a mix of products and services. People love it. What do you kind of say is the key elements that are driving that share taking and those wins that are allowing you to keep growing?
Yeah, we have two or three really special attributes as a company. For one thing, we're really the only company in our business that's treating data storage and data management like both like a high technology business and like a growth business. This area of the business was considered, a commodity some years ago, and even by the vendors. And when the vendors consider a technology a commodity, they stop investing in it, and that's allowed us to put out a number of firsts in the industry, and we continue to do so. We're rated, we're at the top upper right in the Gartner Magic Quadrant, where, if it's GigaOM that's measuring us, we're closest to the center of their bullseye. We're always the number one in terms of, the technology that's being technology leadership and ability to execute. Secondly, we started investing in expanding into the large scale enterprise and cloud some years ago, and we're seeing a real return on those investments. And even though we continue to penetrate that area, our overall wallet share in large enterprise still is rather small compared to some of the large players. So that just allows us, incredible amounts of expansion opportunity, which we're taking advantage of.
Yeah, that definitely seems to be part of it. The enterprise play is one of those things where companies sometimes they kind of wet their beak just a little and see if they can get there. And it seems to me like you kind of dipped your toe, wet your beak, and you showed up, and all of a sudden, you were almost surprised at how fast and how well it was received in that market. Because of course, there are very entrenched incumbents in the particular space you're in.
Yes.
And so how surprising was it to you, or
Well,
did you expect it?
surprising is probably not quite the right word, because you go into something expecting to win, but if you win bigger than you first expect, it's a pleasant surprise. Our something that is not a big point or a big topic in our industry is Net Promoter Score. I don't know if you're familiar with Net Promoter Score. It's a very tough metric for customer satisfaction, and we have an unprecedented 85.2 Net Promoter Score. That's out of 100. What it tells you, and our competitors are in the 20s, at best in the 30s. So what it tells you is that customers, when they do experience our company and our product, are so overwhelmed with the performance, with how well it operates compared to what they knew before, that they're rating us nines and tens. So this is and why is that? Well, we have something we call Evergreen. This is something really new. It's something Evergreen means that our products never get old. So what does that mean? We've sold products 10 years ago, and if you were to go visit those products today in the customer, they'd look like the product we sold last week without ever having to resell them, because we sell our products with a subscription that means that we consistently upgrade both software and hardware. And you use the Apple analogy. It'd be like you talking on your Apple phone, and while you're talking to me on your Apple phone, you take it down a few minutes later and you notice it's a brand new phone, both hardware and software, and you never had to get off the phone in order to be able to enjoy that new experience. That's what we do with our products and our customers every day. We upgrade, we update without ever taking our customers' environment down. That's just incredibly. It's just an experience that customers just don't have from other vendors. Another advantage we provide is something that I've been selling or been trying to sell for 5 years. To be honest with you, for 4 years, customers just didn't care, and now all of a sudden they care a lot. And that's our environmental performance. We have 10 times better power, space, and cooling. So we're 1/10 the power, the space, the cooling of disk products, and we're up to 5 times better power, space, and cooling than our competitors, all flash products. So as you might imagine, now that energy, especially in Europe and the Far East, is at such a premium, and ESG being such a critical consideration for both investors and customers, our performance on the energy front is over the top.
Yeah, you've definitely built you beat me to it, Charlie. I was going to ask you about kind of the NPS CX. I always found it pretty fascinating how much energy the companies put into kind of making it customer centric. And again, I've done a lot of studies on the customer centrism, and I always talk about what I read as the 88 rule. And the 88 rule is that 80% of companies believe that they're truly differentiated, but only 8% of their customers do.
Yeah.
And so there's always been this massive disconnect between companies thinking they're differentiated and actually being differentiated. Your analogy about the Apple phone, the idea that, hey, software and hardware is constantly refreshed and kept current, it really is what IaaS and SaaS is all about, right? Those two things.
That's
So
right.
you're basically IaaS and SaaS in a sense of always the newest infrastructure, always the newest software. And to your point, the customer, you create some transparency and ubiquity to those things, so they know it, and it's constant, and they don't worry about it. And there's no wonder you get a really high net promoter score when your comparable is often rip and replace.
It is
Constant hardware update.
roughly every 5 years. The customer has to rebuy the same. It's like your car, except when you replace your car, you're generally able to sell your old one. And in the case of storage and IT products, no, they have to basically throw it away and rebuy the same thing all over again.
Well,
but
maybe
with us, that's not true.
maybe the CFO was able to depreciate it or something. But yes, it's not exciting. It certainly isn't great on the budget. And this has driven a lot of that sort of OpEx versus CapEx discussion that's made the hyperscale cloud and made consumption economics so popular. Is in the end, technologies, the cycles are getting shorter. The requirements are getting larger. The need for compute and, of course, data is exponential. And so the need for enough storage and enough memory has to grow at a pace that can keep up with the scale of compute.
100%.
So and that's another challenge that everybody is facing right now. Every company, every enterprise is facing. Okay, we've got all this data. We've got to give enough compute. So it's an ebb and a flow. More data, more memory, more storage, more compute, and then it's just a cycle. And you're basically saying it's an outcome as a service that we fulfill the cycle.
Absolutely correct. That's what customers want. An outcome as a service. They're looking for outcomes, not for products, not for even software. They're trying to deliver an outcome to their organization or to their customers. And the closer we can get them to that outcome, the better we do, and the happier the customers we make.
Yeah, I love that. So let me kind of look to the future just a little bit with you. What is the next phase of innovation? So you've kind of built your core products. I know you've made a few acquisitions along the way. You've gotten into container services and a few. What's the next wave of innovation for Pure within the confines of what you can share?
Sure. Well, no, we've been vocal about this. We think the next wave of innovation is delivering to our customers and allowing our customers to deliver to their customers and to their developers a cloud operating model. Now, you might say, well, the hyperscalers have that cloud operating model. And yes, they have it within their cloud, but what they don't deliver to their customers who are running private data centers or who are operating on multiple clouds, the ability to run it across clouds. And so what we're delivering are a set of services where our customers can, first of all, manage their entire environment, both on-prem, in colos, if they use colos, or in the hyperscalers, if they're on one or more hyperscalers, to operate their data environment as a cloud of data, cloud of storage, cloud of data management, that is structured according to the rules, regulations, and policies that our customers want to operate with, and then offer that to their developers or their customers as code. In other words, instead of their internal developers having to go to IT and say, construct for me this type of environment, now their developers, just like if they went just to Amazon or just to Azure, can go to their own IT organization and say, I want such and such a number of terabytes, petabytes that have certain characteristics, and get it immediately on demand, as software, through a GUI, through code. So this is going to. So what's the purpose of that? Very simple. It's to improve the speed of development, improve the agility of organizations, improve their ability to satisfy their developers' needs so that they can deliver products faster.
Yeah, there's no question that there is a massive importance in infrastructure, cloud scale providers, to win the appeal of that developer community.
Exactly.
It's not just the CIO anymore, and
Right.
the developers are driving so much. And then, of course, migrations and shifts to even the business line leaders with no code and low code. But we'll save that for another day, Charlie.
We
Last
actually
question.
do have one more. We do have one more thing that we're working on that we were a goal, I would say, that we were founded on, and that is delivering the all-flash data center. So let me just spend a minute on that. The all-flash, or today, flash, the same storage that's used in your iPhone, is used by enterprise companies, for about 10%, maybe 20% of their needs. It's for high performance. It's because flash is expensive and hard disk has been cheap. Well, we're now right at the cusp of being able to deliver flash for the price of hard disk. And when that happens, the remainder of the 80% or so of bits and information that remain on hard disk is going to switch over to flash for 10x the savings in power, space, and cooling, improvements in reliability. And we see that as the next stage of growth. So we're very excited about this.
A lot to be excited about, and of course, it seems your customers are excited because once the thing about the kind of model you have is it's kind of sticky.
Yeah.
Once they've signed up, it's that constant. It's been set up to be optimized, and you don't see the SaaS economics. Companies don't change unless it's got to be really bad. It's got
to screw up for them to want to change.
And with what is can you tell me? I'm just off the top of your head, retention rate. It's got to be extremely high with your NPM.
So the last time we reported it, which was at the beginning of the year, it was 115%, and I'm not satisfied with that. I'm expecting that to go up.
Well, that's a combination, right, of diversifying your products, giving more things to add, and of course, with inflation, you probably could add another 50-75%.
I believe so. Yeah.
I'm kind of kidding, but gosh, it feels like it. At least on the amount we could add for pricing. Have you seen what cars cost? Anyway,
it's absurd. It's horrible. During the downturn, we never raised our prices. So it also builds trust with your customers.
Well, what I was going to tell you, and I like that you said that, is I've had this conversation with a few people. And I've said, there's going to be a lot of people on the other side of this supply chain that will not be able to come back from this. So I hope they made enough by really gouging every company person that they could, because I know there's a few people on my list, Charlie, that I'm going to remember.
People remember
that really took advantage of the moment. So 30 seconds, because I'm going to let you go. If someone said to you, hey, what's the one thing we think the market doesn't fully appreciate or understand about Pure Storage, what would you say?
I would say that they don't understand that, we are primarily a software company that wraps it in iron, that the improvements we make each and every year, in terms of just delivering to our customers a service that keeps getting better, and that we're being rewarded with that, with a net promoter score, with higher gross margins, and frankly, with ever increasing subscription revenue. And then finally, that at the end of the day, we're going to win, because we're investing in this business like it's high technology, and our competitors still treat it as a commodity. So I would put it down to that.
I love that you said that. I think the companies that have hardware bends that have been able to convince the market that software is how they lead, have all done far better than companies that are still trying to say, hey, we're great on hardware. It's not that hardware's not important. Semiconductors will eat the world. I said this before the pandemic. I say it all the time because I was right. But in the end, it is the software that drives all the experiences.
Absolutely correct. That's right.
So Charlie, Giancarlo, CEO, Pure Storage, thank you for joining Making Markets. Pleasure to have you. Let's have you back again soon.
Thank you, Daniel. Really appreciate the time. Take care.
Thank you for tuning in to Making Markets. Enjoy what you heard? Please subscribe to get every episode on your favorite podcast platform. You can also watch us on the web at futurumresearch.com/makingmarkets. Until next time, this is Making Markets, your essential show for market news, analysis, and commentary on today's most innovative tech companies.